Hi everyone, welcome back to the channel. My name is Kwa. I'm a real estate investor and a realtor. Currently, I manage 4 property that consists of a total of 24 units. Today's video is about why I decided to list one of my properties. My core strategy, if you listen to enough to my other videos, you notice that I always advocate for a buy and hold investing and using the cash out refi method to pull out equity for new acquisition. So that's what I've been doing all the time. I always love to keep my property as long as possible and never have to sell it unless it's absolutely have to. But recently, there's a lot of unexpected issues that come up. If you watch the previous video like from last week, you notice it was about how I know some people quit real estate investing altogether because of some unexpected issue that came up after I posted that video. There was one night that happened, and in the middle of the night, like I think like 12 o'clock, my tenant texted me and said, oh, there's a carbon monoxide leak at one of the apartment. This is the apartment with 4 units in San Bernardino. And then they said that the police is coming, the fire department is coming, and everybody's evacuating. This is like at 12 at night. And during that time, I can't do anything. Technically, there's nothing I can do. So I was super stressed, and I barely get to sleep that night because with all the things that are happening in the back end, like in the background, my tenant going like scrambling. They have to evacuate for a couple hours before they can return back to the unit itself, because the fire department won't let them. And then some people might, they kind of have to like go check up in the hospital and stuff like that too. And that night itself, even though the it didn't cost me any additional money wise, because it's already scheduled to be repaired, but the stress level during that gave me a clear perspective, like a kind of like opened my mind up for, oh, maybe everything keeping forever might not, don't have to be the only option. Like there are other options out there. And so that gave me the that gave me the idea of, hey, maybe I can that property itself might be it might be a good idea to list it or to sell it, and then use the cash on it to be able to purchase something else. Now, not the issue itself doesn't isn't the final straw or the final reason why I want to list the property, but there's a couple things that hit at the same time that does give me that option, giving me telling me that that option might be one of the best right now. The other thing is because of the high interest rate. As you can tell, like I've been trying to refinance this property, like the one in San Bernardino, the 4 unit, for a while now, and I think I missed the boat by barely like half a month. So well, before the war that happened, the interest rate was like around 6.5% for refinance, and that's what I have at the property rate now. So that's what I was planning to do. I was planning to refi, cash out refi at 6.5%, and because I only owe around 514,000, the property itself right now, it's valued at, let me see, do some calculation, it's valued at around 850, right? If you cash out refi at 70%, so you times 70%, right? And then you minus what you owe right now, right? You get around 81,000. So technically, I can pull out around 81,000 to put it into the new acquisition if I can cash out refi. But the problem is the interest rate itself keep on staying at 6.75 level, and on top of that, it didn't go down. It won't go down. It's just keep on going, like slowly inching up. And I'm like, what's the point of I don't want to refi out from like 6.5 to a higher interest rate. So that might not be a reason, might not be a good idea to do. So because of the interest rate, I keep on staying high. I can't refi at this point. The other thing is, if you watch on my other video, you notice I have been looking at a bigger acquisition. Like after the 14 unit, I saw one that's like 21 unit in Barstow, and then another 24 unit in Barstow that if I can get it at the right price, I know there's a lot of like repairs that I need to be done, but if I can get it at the right price, the cash flow might be much better. And that's the reason why I've been trying to refinance the two of my property. This one right away, and this one in Conejo Drive. But again, the driveway, the current interest rate is 6.88, so there's no point in refinance it out to a 6.75. There was a time like maybe like 4 to 5 months ago that I was able, if I did early, I would have been able to do a 6.5% refi, but I missed it because right after the war in Iran started, the interest rate just shot up, and then it never came down. I'm pretty sure it won't come down until the war ends, and that's something that I can't control. So that's the reason why. And then because I've been trying to look for ways to purchase another bigger property, and without the cash out refi for for these 2 units, I might have to sell something, right? So that's why selling makes sense right now. This unit itself, the Conejo Drive, that unit itself, I own 100% of it. So because I own 100% of the property, or whatever I sell, and the extra the proceed on top on top of paying the mortgage, I will be able to keep. And that's another thing that is the advantage for me to sell right now, is because I do have carry over capital gain loss for something else, so I might not need to pay any capital gain on the sale of this property. So for example, let's say right now, assuming that I can sell it for like 850,000, right? And selling that, right, minus a 514, that's for the loans, right? 514, right? That's for the loan. And then this is how much is left. So let's say I have to pay like 20 to 30, like 20 25,000 for like closing costs, and any selling costs. So minus 25,000, I might be able to walk away with 311,000. And that 311,000, because I purchased property back then for 750, so 100,000 is a capital gain. So 100,000 of this 310 11 will be capital gain, and I might have to pay like 25% tax on it, so 25,000. But like I said, because there are other carryover losses, capital losses, I might be able to not have to pay any capital gain on this, because it's offset some of the losses. So I have to check with my CPA. I did call him already, and did check online with the chat the Google Gemini, and they said and the Google Gemini told me that I won't need to pay any capital gain on it. I can offset it for my losses. So let me double check with my CPA and see if that is the case. But for now, it looked like it is. Anyway, so that's the plan, right? So this is the property that I purchased back then. This is this is the outside property. I did a lot of like little upgrade here and there. Did like 2 of the unit upstairs. I did have mini split because the central AC broke down a while back, and this is part of the issue that it keep on coming up. The central AC, so I have to spend like 5,000 just to put in 4 mini split for these 2 units up top. So that they have brand new AC. As you can see, all the window are like are newer, so there's no need for the new owner the new owner to have to do anything to rent it out right away. Actually, right now all 4 units are currently rented, so that's a good thing. Right now, at the current rate, they're bringing in around 60 to 800. So even if I keep those property, it's beneficial, so I don't have to pay. To be honest, I don't have to like sell it at all, because look at the cash flow for that property right now. I bring in 6814, right? Mortgage is only 3200, and then property tax is 725, insurance 266. That's based on like a 3200 a year. Those are actual number. Maintenance, this one is an estimate right here, and electricity, vacancy, and property management. So the cash flow for it, profit and loss for that, is actually $865 per month. So it does have a pretty good cash flow for it, right? So it's like I think I'm bringing like around a little bit over 200 per month. And on top of that, because I manage it myself, I can actually keep the management, and then there's no vacancy for the property, because ever since I evicted the last tenant, that's like over a year ago, I don't have any vacancy on it. So I can recapture the vacancy and the property management fee. So my actual profit and loss for that for a particular property is actually 1,600 a month. So it's actually pretty strong. So I mean, I'm not in a situation where I have to sell it. So if I can sell it at that price, it might be beneficial for me to roll over to the new unit or the new acquisition. But if I don't, then I still can keep it, because as you can see here, even after the profit and loss, and you can actually subtract some more principal, because right now I'm currently paying like I'm currently paying like five to $512 in principal per month, and this is based on the first payment only. So it probably a little more now too. So on top of the 1,600, I actually make another 500 on principal pay down. So on all, it's like around 2,100 per month for that unit. So keeping it, I'm still making 2,100 a month on it, but selling it, I will get the chunk of cash, and then maybe able to roll to something that I can make more money on. So here is the unit itself. Nothing in here is actually like old. We did a lot of repairs inside. We did like a new flooring. So, and then I even have a fence. I don't have a new picture. I think this is from Google or something, so I don't have a really new picture of this. But I actually have a fence now here and a lock in front, so the mailbox moved out already. So it's very convenient, and it protects the tenant. It keeps the tenant safe also, because a while back they told me that there was some issue where people keep on coming to their door and knock and bother them, and they don't like that, and that's the reason why I put a fence up. So the unit itself, it does this one actually gave it a better estimate than what I expected, but if I can sell it closer to this, that would be amazing. So anyway, with the 310, I might be able to use $250 thousand to roll into the next unit. And my plan for acquisition is around, let's see, how much was it? 1.8, right? Time 0.3, that's 30% down for a commercial property, right? That will be 540. If myself is 240, right? If I put in 240 myself on my end, right, then I only need to bring in 300 from investor, and I think I have enough people to do that. So again, that's the reason why, if I can sell it and capture a good chunk of the capital gain without paying any capital gain on it, and be able to roll it to a property that a larger property that can bring in better cash flow and better returns. I'll probably gonna do that, and that's the reason why I listed. I mean, I'm not done listing it yet, but I already put it on the MLS as a pending. See my incomplete listing. I have like again, I'm a realtor, but that also, so I have access to the MLS and I can put it up. So that's my price right there. 878. This is a big description. These are all actual. This is the rent that I bring in. This is vacancy, a 5% vacancy rate, 4,000 a year. But I captured that 4,000 because the whole last year I didn't get any vacancy on it, so it's pretty good. So if you subtract all the operating costs, you're making around operating expenses. The property itself actually making around 5,000, 57,000 in income a year. 57,000. How much is that? I think that it's a bit off, but then 4,000 something a month. So that's not too bad. But this is assuming that you don't have a mortgage, right? So because I have a mortgage, so the actual one is lower. But then if somebody buy it in cash, they can make like almost 60,000 a year on a 800. So that's like how much? How many percent is that? Let me see. This one. So this one divided by 8, 818, 818, 81888. That's like a 7%, 70%? No. Oh, 888. How many 8 is that? Oh no, schedule. Oh, sorry, the price, this one. That, yeah, there's around 6%, right? 6, 7%. Yeah, 6.5% cash on cash return. So I mean, the property is in Southern California, so it's not too bad. And then most of the maintenance has already been done. I got new AC unit. I fixed the most of the leak have been done. That one of the unit down here is actually have a new bathtub a while back. There's a leak, and then I send the plumber in. He already fixed the bathroom and have a new bathroom on the bottom here. And then we just recently the carbon monoxide issue was with there's a leak in the laundry room that leak into the unit downstairs right here, and we have that fixed already. I think I spent like around 2,500 to fix all that. So and then they have a new water heater that just installed like not a year ago yet. 70-pound water heater. So all in all, the unit is in pretty good shape. So whoever purchases it might, it's a turnkey because I already have 4 tenants living there. So it's even, I put the actual rent right here. That's what I collect or for the property itself. And the unit mix is 3 bed, 2 bath, 2-2, 2-1, and 2-1, and it's in Barstow. So anyway, if you found this this proper this breakdown valuable, please hit the like button and subscribe so that I can bring more content like this to you in the future, and I will keep you updated on my investment portfolio. So one step back, but to be able to do a 2 step forward. I never thought I would have listed a property for sale because I always thought I always choose the refinance route if I can. But with the market right now and the crazy interest rate, it might not be able to, I might not be able to refinance in this favorable term. So, and the other thing is, in order for me to get the money to buy the next unit, I have to refinance both units. This one, because this one itself, refinance, I might only be able to refinance and get like around 80,000, which is not going to be enough. So I have to refinance this one too. But with a sale, I can, I just need to sell one property and I don't have to refinance the other one anymore. And the other one's, it's growing. I mean, profit and loss still low because I purchased like at a higher price because the rent starting out really low, but then I was able to capture a lot of rent like in the last few months. Can you imagine like this one, this 1350 when I purchased like 3 years ago, the rent was only 950. So all three of these units, I think it's only bringing like around 3,000 or 3,200 a month. And in the 3 years I was I own it, I was able to raise the rent up for like 25%. And I didn't raise over the 25%, but then each year is like only like around 5%. The reason this raised up so I was able to raise up so much is because this unit right here, you know, one of the 10 move out. I fixed it. I have it fixed. Turn it over. Everything's new in there, and then was able to list for market rate. So I really like this property too. It's a really big unit. So in the long term, it should give me a lot of a much better cash flow. For now, it's not a lot, but in the long term, it should bring in a lot better cash flow. So anyway, thank you so much for watching my video, and I'll see you next time.